I want to bring in Recon Capital Chief Investment Officer Kevin Kelly. Kevin, good to see you. Thanks so much for joining us.
Thanks for having me.
What do you think drives markets this week?
I think what's going to drive markets this week is actually how companies are going to address going into next year and what they're going to do to drive revenues. There's been a big revenue problem here in the United States. We've seen only 43% of companies in the S&P 500 beat on the revenue side. But it's conversely happening over in Europe, right? So if you look at the Euro Stoxx 50, earnings and revenues are set to top 10% for this year and 5.7% for next year. So that's why you're going to start seeing a deal-making atmosphere happen. But we are seeing a recovery in the United States here on the consumer side. If you look at the ISM non-manufacturing managers index, that was up at a robust 59.1 this month. And that's a great sign. That's showing that the prices at the pump are actually translating into services being used in the economy.
Yep, and of course, and then there's the deal flow. Anthony Scaramucci, let me get your take on this. You know, Bloomberg had reported over the weekend that Apache, an $18 billion oil company, has received an unsolicited offer. We're still waiting on commentary about this, but apparently they rejected the initial offer. Bottom line here is we continue to see consolidation in the energy space.
And it's stuff that you and I have talked about often about the unbelievable amount of cash on the balance sheet for most of these companies. In addition, on the energy side, because of what's going on the price of oil, you're going to see more consolidations, Maria, because they have to cut costs in order to keep their profits up. And so you'll see a lot of that cost synergies take place into the first and second quarter of 2016.
There's the bid and ask on Apache, Kevin, and we're looking at a gain for the stock this morning on this speculation. Do you think oil prices have bottomed, Kevin?
You know, this is a start to oil prices starting to bottom, right? When you start seeing deal activity happen, you're going to need some companies to actually go through some pain and go bankrupt. But it's not necessarily a bottom. And one of the reasons why is because you're seeing a slower growth environment globally, right? We haven't seen a bottom in copper yet. We're seeing exports out of China down again for 7% on a year-over-year basis. And so that's showing that emerging markets, including China, are still hurting, and they are the natural buyer of these resources. They're the ones that are growing and are supposed to be in an expansionary role that the U.S. sells to. So because we're not seeing that conviction yet, which may be a 2016 story when they bottom, but it shouldn't be till the end of the year.
In terms of the M&A activity, the above the fold top story in the Wall Street Journal is how these low-quality takeover loans, that there is very little appetite for them, that bankers are having trouble selling billions of dollars of these loans, and that is a major sign that at least some of this M&A activity could slow down dramatically.
You know, Maria, also and Anthony, you were talking about this earlier, a lot of these companies already did that streamlining, consolidating, they laid off. There's nothing left, so either they have to get taken over or they have to shift their business practice, a lot of the oil energy companies in particular. So where do they go from here, Anthony?
Well, I mean, where do they go from here? They're going to start incrementally hiring people, which is why the Fed will likely increase rates either in December or shortly thereafter. Because if you look at that jobs number, Scott, it's very hard to look at the federal, the FOMC and say that there shouldn't be a rate hike.
But if oil prices stay low as they are, how does that affect the bottom line?
Well, I think that's beneficial to some of the companies, but it's not overly beneficial to the United States. Imagine in the 1980s us saying that oil prices getting whacked by 60% wouldn't have the benefit to the United States. It just speaks to the dependency now that we have in large parts of the country on oil. 9% of the GDP is now tied to it.
The Fed is desperate to raise rates.
Yeah.
You know, you have
just
to
save face.
Exactly, just to save face. In fact, even the candidates complaining about the Federal Reserve and manipulating the price of money. Kevin, what do you think? You think the Fed raises next month?
Yeah, the Fed does raise next month. I mean, they've gotten every indication, whether it's even on the wage side, up over on a 6-year high, right? 2.5% on an annual basis. Wages are up. That leads to healthy inflation. And we already know if we go by core CPI, it's at 1.9%, just shy of that 2%. So we're at the full employment that they need, and we're going to start getting that inflation that they want, and we're seeing it in the numbers. So this is a great time for them to do it because they can do a one and done and buy a year where they don't have to do anything else and see the shakeout. Really, 25 basis points is nominal. It's not going to really move anything, but it's going to help the Fed a lot, especially buy them a year where they need to address this issue again.
If Bill Dudley makes a speech in the next 2 weeks That's usually the indication. He's the one that's put it on the table and taken it off the table over the last 2 years. And so he's the canary in the coal mine, Maria.
Well, the other issue is that if they don't do it next month, then they're in a political, they're in a political year. It's an election year. And
you want to feel some hate from the presidential candidates. You start raising interest rates.
Exactly.
Well, who does it hurt the most? I think it hurts Secretary Clinton if she's the nominee.
It most certainly would.
It'll start to
it would hurt the Democratic nominee.
Why do you think it hurts the Dems more?
Because if the economy starts to soften, the Republicans can blame it on the economic policies of the prior administration and tag her with that, Maria.
And we're not going to have a high raise anyway. It's going to be just a figurehead.
And that's the reason why they won't go for the high raise. I think Scott's right. It's probably 25 to 50 basis points.
Even though we're seeing better numbers on the economy, I mean, there are so many expectations that, in fact, we could go into recession sometime in 2016. Is that what you think?
Every 7 years we do, Maria, and you know what we need? We need about 300 basis points of stimulus every 7 years to keep the economy on an even keel. We can't do 300 basis points of stimulus when you're at zero.
Well, let's repatriate all that offshore money.
Well, that's why it's time for some fiscal operation with the Congress and the President.
And it's why Republican primary voters want tax reform up there on the agenda.
Amen.
Kevin, good to see you. Thanks so much. Kevin Kelly joining us in New York.